Okay.
All right. Good morning. This is weekly analysis for the 16th of December. I'm with Duna once again.
Hello.
He's gonna start with NASDAQ. I'll, in the meantime, sorry, brother, I'm not gonna be paying much attention.
That's okay.
I'm gonna be preparing my chart because I haven't done Bitcoin in a while. So, yeah, Duna, kick it off. I'll join you soon.
Cool. Will do. All right. Hello, everyone. So let's do some analysis on the NQ. I'm going to start with what we did last week, and just kind of general vibe I'm getting from the whole situation with price. And I'll run through some immediate time frame stuff that we might be able to act on today, as well. So try and do a bit of everything. First, I'm going to go through some trades that I got that were based off some interesting moves. Back here, we hit this crazy gap up during Sydney's Open, which I thought was like kind of insane. It's been a very long time since I've seen something like this, which was like a 0.4% gap up on Sydney, which was just kind of mad. We came into that gap and got some nice absorption, and we started pushing up for UK. We had a lot of built liquidity here from this push down. This was news pushing down. I honestly expected them to come. The last video I made actually was up here, and I was expecting them to come down either into this zone here or to come up and mitigate this area, but they really just aggressively pushed it down for New York, and it spent all of its time down here. And then Sydney's Open gapped up, so I took a bit of a long off that and a short on UK Open. And then coming into US pre-market, we had taken this high, and we were getting like very, very obvious signs of exhaustion just through money flow. So I took some nice scalps into structure, which then grabbed some liquidity. They had a huge short squeeze, and then that squeeze led to this greater change of character. This greater change of character came into the gap. It hit a really nice point of control, and we created these ascending lows into this internal structure, which is where we are at the moment. This leaves us kind of in a bit of a gray area. This gap was also an RTH gap, which we have bounced off the 50%. We have a lot of vector recovery above us, but you can see that we're kind of trapped around the 50% of this big kind of swipe to both sides, right? Which, well, let's look at the implications of that. We are still bullish. This was a greater bullish break of structure. If I go to the 15-minute, you can see that this was a greater bullish break of structure. This coming into this gap is arguably a liquidity grab. The only reason I wouldn't jump to the conclusion that this is the liquidity grab that could take this high again is because of this, a lot of signs of inducement that I'm seeing here, and I would have liked this low to get taken again and then see a very nice internal break of structure in order for me to go, okay, yeah, this is a check mark, right? I have this break of structure with the exclamation mark, and that to me, it's just kind of how I do structure. Structure's broken, and then normally you'll have liquidity taken internally and then create internal structure that kind of validates that break of structure, right? To me, both of these are kind of pending. This one and this one, they're kind of pending. So what do I do in this situation? I treat it like a range until I see very, very kind of incriminating liquidity taken and a reaction from that internal point. Then I will decide, okay, this structure is the one that's taken over or not. Right now, they're doing neither of them. Locally, very locally, yeah, we're bullish. But we're coming into the pull of this big kind of knife down, which is still obviously, you know, a pending bearish kind of bearish pull, right? I'm liking zones above and below this range that we're in, and we haven't taken Sydney's higher low. We still have Japan's or Asia's extremities, or actually one of them just got taken there. So this high got taken. We still have Asia's lows and highs. And what do we have above us? We have this nice anchored VWAP, which is coming into, or which is situated around this red vector recovery area. It's around a nice psychological round number, I would say. And we have the anchored VWAP, and this zone here was responsible for the initial change of character, like the micro change of character, which led to this push down. If we're going to see a reaction for a bearish continuation of sorts, even internal, I would like to see price not be able to break above this. I have this 7-minute OB up here, which honestly is just it's a bit iffy. Maybe during US they could come into here and get absorbed and pull down, but I wouldn't necessarily be taking crazy confident trades off this close to the high. But I do like this zone around here, taking liquidity into 21,860, getting absorption around the VWAP, getting some breaks of structure to come into this bullish demand zone. I would like to see that. So that's what I'm keeping my eye out for. The only problem is if we zoom down to the 1 minute, a lot of this area has also potential kind of easy liquidity to grab. We have a small little wash here, and this is the wash that I would be hoping would hold if I was looking for some bearish plays. So there is a chance. I think there is a chance that we could get a reaction from there. We have below us, we have equal lows on Japan's low, situated above a nice fair value gap, kind of gap up around Sydney, which is situated on a lot, like just very easy liquidity to take on Sydney's low. And below it, we have this bullish anchored VWAP, which is directly lining up with a naked point of control, which is right on top of the past daily VWAP. And we actually have both of them right on top of naked point of control. So our past daily VWAPs are right here at 21,835 and down here at 21,720. They're both on top of naked points of controls of consolidations, which had a noticeable effect. So even there, we can see that like we have kind of valid reasons or valid areas above us to be focused on, perhaps taking some trades from. We have these lows down here. The thing about coming down here, I'd be kind of cautious about taking longs based off this little consolidation, just because of how it looks, and we don't necessarily have like we can knife through it and still maintain this kind of 1 hour kind of uptrend that we have, right? Like we're able to come down to there and it not make much of a difference. So I'd be kind of cautious. I'd like to see some strong buying coming in around past daily VWAP and that point of control, and not necessarily start breaking down close to these lows. I would be a bit iffy on that. If we zoom out on the 4 hour, we do have money flow diverging as we're coming up. We are in a 4 hour red vector, so I mean recovery of this vector is on the cards. Whether they stop internally and reverse it to take some bullish points of interest, or else they take the high again. I don't know, and that's why I'm kind of focusing on this area to see what kind of price action we create in here, because I would not mind them showing me what I want to see, to get into a trade that is something like absorption around here to knife into structure.
Are we on price discovery again?
Yes, on the NQ we are. So that's a good thing to bring up. On the NQ, we're in price discovery. The NQ itself and not the futures took 20k for the first time ever, which is very notable.
Interesting.
But the ES has been basically making the opposite kind of moves. Like it's not taking its past highs. You could say we're actively getting kind of large time frame kind of SMT kind of vibes, but I find the higher you go on your time frames with SMTs, the kind of less impactful they end up being. But it's in my small experience of trading them. Actually, just noticed this, that we mitigated this 1 hour fair value gap on that knife down that we had before
Previous structure
Sydney,
points.
and actually
Like
it was a 4 hour mitigation there, that's rather nice. It's actually a 12 hour fair value gap mitigation. I like that.
Yeah, that's
the thing is, like, this gap, yeah, you wouldn't really want to see price spending much time at all below this gap, or even coming towards it. I'd be rather careful. It's around the structural point as well there. So I could probably get rid of that, because this seems to have done everything it needs to. We have this larger structural break, which is in play at the moment. But yeah, so like greater, we are bullish, I can see us perhaps like semi-ranging in here for a bit. It's a big week for news as well. Like there's going to be the FOMC statements are coming up on Thursday. We also got little bits going around during the week, and today we have manufacturing. Tomorrow we've core retail sales. It's going to be like, it's a kind of a big week for news. So that just means volatility really. And I find when there's news, a lot of my timing models don't necessarily line up. But this is what I'm kind of seeing immediately, is we have zones below us, nice demand zones that I would like to see interacted with. We have this kind of untapped supply pull that we could also get some reactions off. I have my levels. I haven't seen anything like necessarily immediately good. I mean, we saw bullish behavior around here. I took a few shorts. I took a short today on midday on Asia coming into this pull, and then I took a few scalps going up, but I wasn't
sure. It's funny to say midday because it's like fucking dawn here.
Yeah, sorry, it was midday.
Had
midday,
just started
Japan.
to sleep.
Yeah. Yeah, midday Japan, which is like 3 a.m. in the UK, but
yeah.
I didn't know if they were going to, like, I saw what I wanted to see for bullish stuff, so I took the trade. But the thing is, we still have these equal lows here, and they're damn equal. They took internal liquidity, granted, here, right? But like these are flat. We have these lows here, which just look horrendous, and they're situated around the US's close from last week, and they do like to interact with that point. Whether they cut through it or not, I don't know. But this zone, like, God, if we get breaks of structure into this, like, I just feel like we're going to come down to the demand that's below us. Like this naked point of control, it's a round number, 71 or 21,700 area, or even 21,725. Like, we have like, even though we don't like the look of this, like, we spent a lot of time below 21,700, and if you want to just look at like quote unquote orders getting filled at round numbers, like, this looks like maybe they could have done enough for them to bounce above it, and maybe get some kind of internal relief into the week or something. You know, that's pure speculation, but I've found that recently I've noticed that like the NQ does it does just behave around round numbers in a way, in a certain
Like
kind of way.
psychological numbers.
Yeah,
right?
psychological numbers, right? Yeah. So that's why I'm kind of focusing on this little block as well. But I would like to see a really quick move, honestly, because this is the last liquidity kind of reference point that I have. So I'd kind of like to see just like proper absorption into the block and then like a nice break of structure, like something like this. I don't want to necessarily see us like taking really nice liquidity, like bullish confirmation liquidity, like coming into this zone, like, because if I see that, like I've less conviction for it to stop at this block and it to just, I don't know, take this high and then wick down like crazy for US or something. So
Yeah.
I know exactly what I want to see here. So yeah, UK has kind of built this little curve. This is not liquidity anymore. This has been kind of changed now. And yeah, we could argue that the thing about this now is this would be my structural point. And we've kind of created, to me, which seems like a bit of a vacuum here, right? That we can easily come back into and base out to make, you know, this is higher low, and then we could put higher low here. And it would be part of this structure, right? At the moment, like coming up and then knifing down into that structure does not seem crazy to me at all. So I'm gonna wait and see what happens around my windows, but you know, immediately we're bullish. But coming into some higher term liquidity or higher time frame liquidity soon would line up with one of my bearish models. So if I see this at the right time, then yeah, there's definitely a chance that I'll take a short based off that. It has to happen pretty soon though. So yeah, that's the immediate term TA. My reference point for this greater bullish structure is this 12-hour mitigation. I would love to see them range above that. I think that would be really nice. If we break this, I'm not sure about what could happen because it is right above a massive RTH gap. Like, it's huge. Like it's that's messy. Sorry, it's huge. This thing is massive. It hasn't been tapped. It's like it's a very important point. So breaking below that mitigation candle, oh boy, I'd have to think about where we are again. Now, even on the 30-minute, like you can see that there's incriminating money flow behavior happening here. Even with like waves and everything. Like I'm still cautious of this whole zone down here. I don't feel really comfortable up here, if I'm going to be honest. Like I'll still trade it. I'll still take the longs. I'll still take the shorts, but things are feeling a bit
iffy,
a bit overextended, you know, like there's something off about what we're in at the moment, and I'm never going to, until we come back into here and base out properly, that's going to be on my mind. Like it's going to be on my mind that once we get like hourly breaks of structure, once I make a whale that doesn't have an exclamation mark, that's a bearish change of character, I'm going to be really, really cautious with any longs that I take over the weeks after that, because I got a fishy feeling, dude. It's a fishy feeling about this daily and weekly structure.
Go on the weekly. Try to find out what happens on the last week of December every year. Do we have a pull down?
Look at this, bro.
Because that would be funny.
Okay. Let's do a little experiment. Okay, so it's 2024. Okay, I'll mark them all out. So this is last week of December. This is, I'll say, a week before Christmas. So we have that. February, January, December. Here.
It starts losing momentum.
December.
Apparently.
Here. And back in here.
It loses momentum.
It loses momentum on what it's doing, yeah. Except around here. Which, I mean, this was a fresh weekly break of structure, right?
Yeah, but if you notice, like the previous week was very impulsive. Yeah. No. I'm just talking the previous week before your line.
Oh, this?
Yeah, that was impulsive, and then
it
ranged inside that candle. It's an inside bar.
That's fair. Yeah.
20.
I suppose I was just saying like into January, right?
Oh no.
Like,
I'm just saying like from one week to another. If you compare the candles, whatever it's doing, it loses momentum into Christmas.
Yeah, that's true.
From one to another.
I mean, bro, like, I don't know, man. Like, the thing is, like,
makes sense. I think all markets do that.
Yeah. I'm just looking at the PA itself, like, even on the weekly. The thing about money flow on the weekly and stuff is like it's incredibly difficult to kind of use it very effectively, I find. But as we zoom down, like, I obviously, like, look, trading is just about what can happen, and being aware of it doesn't mean that it's going to happen, but what they're able to do and maintain, you know, the same narrative, just like this. Like, we had this, right? And then it was like boof down, and it made no difference. Like, this made no difference. Like, this was just a really aggressive liquidity grab because they were able to. And I just find it the same here. I just find it, I'm really cautious, and the whole precedent of this big massive push up was based on elections, you know, as well. So something just to be aware of, like that. Yeah, I as I said, once I see kind of very large daily breaks of structure, like change of characters, bearish, I'm gonna keep my eyes open even more, you know. But I'll play the internal ranges, and right now we got a setup for some nice areas of supply and some nice demand zones. You'll notice I don't have a block marked down here, and that's like I'm a bit iffy on these lows. Like, I'm just a bit iffy on them. The only block that kind of, like, we have mitigation around here. I guess the only block around this zone, it's this block. Like, it's this kind of 10 minute area. And the only thing that, like, saves this block in my eyes is this really tiny internal liquidity grab before the initial change of character. So, like, or sorry, not the initial, but like this.
Wait, you're saying that you don't like that, or you do like that?
I mean, it's something I could act on, but because it's above this, like, because it's directly above this, like,
yeah,
I'm just a bit off on it. Like, this is the LLBU, which I just call the lower low before the uptrend, like, and it's a mitigation of this fair value gap. So, like, yeah, I suppose, like, even it could come all the way down to here, right? Or it could even go down below this. But the kind of buy up that I would like to see for me to even think about longing would have to be like, it'd have to be rather large into this zone. Could happen. I mean, it's a valid point. Like, we have things down there to bounce from. How far would it go? I don't know. Like, if we come up first into this and then we start breaking structure downwards, like, I'd have to see something crazy in order to think that we could come up to these highs, like, immediately. So if it did happen, I would, and I was awake for it, I could take the trade, but I'd probably take it internal. I'd probably take it to, like, an internal target. Like, that's just me, like, but yeah.
It's Monday. I think I would do the same.
Yeah, exactly. And I would be delighted actually if they did this, because that would mean we're probably just gonna move sideways in a big old range for the rest of the next few days, and I would love it. I eat that stuff up. We'll see what happens. Everyone's like, no man, I wanted to keep going up. It's like, nah man, go sideways forever.
I never have a bias, man. I lost the logic of having biases so.
Well, to me it's
so
not
long
a bias.
ago.
It's what I enjoy trading. Like that's why I would be happy.
No,
Is because
yeah,
I really enjoy.
what I
But I'm
mean
not
is,
like go
is
up
in
or
that
go
sense.
down.
Yeah, yeah. What I mean is in that sense. Like I don't care if it goes up or down anymore.
Oh yeah, yeah.
That's what I
Oh,
mean. Yeah.
completely. Yeah. Sorry, we're on the same. We're on the same thing
Yeah.
then.
It's
A lot of
just
people are like, cross their fingers. It's like up, up, up. Oh, is that? Yeah, that's totally. That's a break of structure. Let's keep going. Let's keep going. And it's like, I'm just
exactly.
like, oh, it did this. It did this. All right, let's switch. You know. And it's so hard to. It's so hard to.
I think that's
It's
the.
so hard to get there. But
Yeah, I think it's the
it's
only way, man.
so important. It's really important. You got to be objective. Like you have to. Yeah. So that's it. That's it from me. This is my chart. This is what we're looking at, and I would like to pass it on to Andre for some of that juicy Bitcoin analysis. That
All right.
TA that you're here for.
Well, let me switch scenes here. Okay, I left some of the things that I had on the previous stream. Oh, and by the way, let me just check if sound and everything is okay for me to not fuck it up like last time. Give me a second. I think it's okay because last time I switched scenes, we fucked it up.
Oh, that's true.
I mean, I fucked it up. Let me just check. Let me just check on the phone.
Yep, I'm just gonna post these charts, so I'll go a bit silent as well.
All right. I think it's okay because last time I switched scenes. Yeah, it's okay. Thanks, Vance. Vance is online. Alright, so I left some things here just to have a little bit of a comparison because last time we talked about Bitcoin, or I talked about Bitcoin, we were way up here. We hadn't yet touched this breaker. We did on the day that I was streaming. And then we gapped down, created this CME gap, but we had another one below us. And this was that time where Binance actually took a lot of liquidity here. And we were ranging a little bit down here at the time. So right now we do have a gap, but it's an RTH gap, which I hadn't marked yet. Give me just a second here. And we have not touched that gap yet. And I'm gonna set an alert for the previous structure point behind the gap, which is over here. Because I think touching that point and having a reversal model is gonna be a very nice long. And why do I think that? For the same reasons that we were talking about, that we can logically continue moving up at least close to Christmas, so probably another week moving up. We still have the possibility that, for example, on Binance, this breaker zone was already broken. We are currently above this, and we are making new highs. So price discovery is still very possible. And the logic for this is that it was the previous range POC. It will continue to be an important price level because it's just below 100k and we have liquidity there. And it's just basically maintaining the uptrend with the logic of restoring gaps. So if we go back to the normal chart, we can also see that, as you can see, this gap has not yet been touched, and we created now a CME gap, the weekend gap, which aligns with two things, and as such this becomes two levels that I'm watching for along in case the first one breaks, which is we currently have now this range to watch out for, which places the POC of that range over here. Okay, so this naked point of control did some work, and the breaker worked for some time, but now we broke out of it with the weekend. So because we broke out of this, and by the way, let me just point it out that this was my New York opening range model once again, because we reacted to the breaker, came down to the TR pocket of the opening range. I don't know if we touched that block. Let me check. Did we? No. Close to it though. But basically, let me delete this just to not have even more lines. We did that, and it was basically up, up, up from there, with a little bit more of a range as usual on Bitcoin, but we continued up. So now we're in price discovery on Binance and CME combined. Currently, I would watch out for a short either after taking this high over here. I think that this as a block does not look like a very healthy block to secure a good short. Talking about these upwards candles here, I don't think they're too trustworthy. So reaching this gap, I think it's logical, but it will probably be with the logic of coming to this range POC. Let me line it up here. Coming to this range POC, and either pushing even more up from there, or actually taking the whole gap. Like if we don't see a good reversal model here, I would, and if I'm in a short, I would actually bet that it continues down and touches this RTH gap. Obviously, I'm not gonna check where's the expansion POC because it's gonna be here since we have a range. But this is essentially, and for folks that might be wondering why I say that, I'll do it anyway just for you to check. It's just where we range the most. A lot of orders are going to be there, so doing it from the bottom to the top or the range itself, the POC is going to be there anyway. What we might do is check this lower range over here, but this is mostly gaps and wicks. I'm not that convinced that it has to come down here as much, but if it does, this is the range POC down here. So let me see if I have any VWAPs that align there. We have a naked daily over here. And we have the previous week down here. So I wouldn't count on that as support perfectly, because I would think it has to take that low and reach into the gap. So I'm not going to mark the weekly VWAP, the previous weekly VWAP. So in terms of the CME, these two gaps are the areas that I would be looking for trades. So let me take this guy out. I'm gonna leave these gaps here just for an historical comparison for whoever doesn't know much about gaps, just for you to understand what happens when they get tapped or completely filled like that.
I'm just gonna say that I'm gonna bounce because I have some things to do to eat.
All right, brother.
I'm gonna try and trade the NQ, but good luck with the Bitcoin analysis, and happy trading, everyone. And I'll see you tomorrow for the normal NQ scheduled daily analysis.
All right, you too, brother. Bye bye.
Peace, guys. See you.
So let me just take the opportunity to post this. Give me just a second. Today is 16, right? Yeah. All right. Oh, I forgot to post the link of the video, but Duna did it for me. Thanks, bro. Give me a second. Coming back to the stream. All right. So this is what we have on the CME. I already pasted the image on a new post. I'll put the post up soon. On the other hand, what we have on Binance was nice to look at, in the sense that this breaker that I marked out and wasn't around to trade at the time was nice in two ways. It was nice because it was resistance for a whole day, and then New York did essentially the reversal model. And by the way, let me go back there to show you what I mean by a reversal model. And I'm even on the 15-minute, but this is a good example, and I'll go down to the 1. What I mean by by reversal model is that you see this markings that I have here. These markings basically show the TR pocket areas of the first 15-minute candle. So it's essentially the same thing as pulling up a Fibonacci retracement tool and doing this. Okay. With these deviations. Let me put them on the left side so you can see better. These deviations generally have some kind of a reversal, and I only trust it enough to take a trade when there is a move taking liquidity of the session like this. We had these lows over here and we took them, but with vector candles. Those vector candles become essentially inverted gaps once we close candles above it, and they continue to be support more often than not. And that is essentially what I do every day, or try to do. So this is the 15, but I'll go on replay to show you how it was on the 1 minute. So let me pull it up just a little bit more. Okay. So the logic here would be that we create all of these lows over here, right? Like a stacked liquidity line. So when we do eventually take them, if we do it with vectors like we did here, I mark these areas out, and these are my action areas. This is where I take trades from. These areas generally function as supports, right? but it has to be in this context. It has to take liquidity and have some reaction, and then basically you can watch it as an inverted gap. You can watch it as, for example, as an order block, a classic order block. All of this can be your logic for a push up in this case, and it is truly as simple as that, but it does require a considerable amount of patience, and a lot of times it either just doesn't work in the sense that it doesn't go to the TRs and just finds a really nice movement up or down, and sometimes it does things like this, which honestly I just don't trust that much and usually don't take trades from. I know that we can argue that there are vectors here as well, but I don't see like a logical gap. There's too many wicks nullifying the gaps, and we can always have arguments for things like, oh, there's on this move down there was only one vector to recover and it did recover, so why not take a trade from there? But if it's not my model, I just don't take the trade, right? Trying to perfect and create statistics about it, and that's it. Another thing that you can do is just like pull a volume profile of this range, see where the volume area low or high, whatever, depending if it's up or down, and take a trade from that. But it's not my model, so I don't do that. But it worked here anyway. Not exactly with my vector logics and the inverted gaps being completed and having candles closed above, but it worked. Anyway, moving on. Let's go back to the 15. One thing that I had talked about, oh, let me get out of replay. One thing that I also talked about previous week was to watch out for the anchored VWAPs that I had here. This one, blue line, is the standard VWAP and deviations from the bottom, and the white line is from the top. It's very common if price starts with a gap on like gaps up or down, up above or below a VWAP like this, it usually stays above it. And you can see that even though we were reacting a lot to this white line going down, once we were able to move out of this and move up, back again above the white one, which is technically the bearish one because it's from the top, but if we are able to go above it once again, then we have, for example, we have this low, take out its liquidity and having support on that white line once again on that VWAP. This usually works really nicely. I can also point out that you have a deviation of the bullish VWAP here, but that's not something that I trust as much. But this I do. Switching from bearish to bullish and then finding support on it, it's usually a good thing. So this breaker did quite some work now, and we can now also check the expansion POC like we did on CME, going from the low to the high. And now we have on Binance, we have more things than we have on CME to watch out for. So we have this is the expansion POC. Let me just change that. that is the expansion POC, and we have also previous day view up. I'm not going to mark this because it's too unreliable in my opinion. It's probably tapped on some other exchange. It's very fishy, so we have a tiny wick almost added, so I'm not going to trust that as much. But a naked POC maybe, because we have this range over here, which is one of the ranges that we were talking on CME, and then the other range that we were talking about is this area over here. When we talked about the second gap that is around here, when we talked about the second gap that is not filled, the RTH gap, that's where it is. So if I hide all of this, and let me also hide this temporarily, just to clean the chart up a little bit. Right, I can also delete this. This is liquidity that we were aiming to take out. We did, reacted to the breaker, perfect plan. Doesn't happen often, but that was a perfect plan. Or doesn't happen that often, let's say. Let me delete this as well, and this, and this, and this. Alright, that's better. I'm gonna keep this because it's important. So this is where we have that other gap, this gap. That is not yet fully filled, but that is an RTH gap, not as important, but you know, important to keep in mind. Important enough to keep in mind. So currently I would be interested in this previous day view up, at least as a target for a short, and then possible continuation from here, and going down. Then I hope this area will be supported, and I say I hope because if we don't, then we're gonna take this low for sure, because the CME did not take it. That's something else that I'm not gonna remove soon. I know that eventually this is a target, of course. I don't know when. If I did, I would be filthy rich, right? But this is something to watch out for. These levels right now are something to watch out for possible continuations. So on Binance, 102.945, let's say, 101.300, 100.250, and 97 essentially. All of these areas are interesting for trades and or scalps, like longer trades and or scalps. But currently, I obviously would not be taking a trade here. We're in price discovery. It's very dangerous to be betting on longs, especially. So shorts, maybe, but only after taking liquidity and like this high over here, taking liquidity and creating some kind of structure down. Because if we just very simply take liquidity but don't have any kind of follow-up, I don't trust it that much. But this area is interesting, at least for a target. At least we are stacking up liquidity here. These two pivots here, this and these, are equal lows. This area over here is a little bit better because this move took this low before starting to move up and reacted to this inverted fair value gap over here. This one. Same logic as I was telling you guys from the New York opening range. Same logic. We take liquidity, over here, flip this FVG. It's a bearish FVG, but we flip it and then use it as support. It's the same logic. So this area, although it is better in terms of taking a trade from it, if price comes down back to it, I wouldn't be so sure that it can be support once again. And that is why I also have that range POC down there marked. And to be honest, I don't think we have to complicate more than that. It's just wait for price to take some kind of liquidity, which, by the way, let me take the opportunity to set an alert here. Okay, and previous day VWAP is the basic target, like TP1 target kind of thing, with the possibility of going lower. If I was in a trade, I would probably take everything out there, just because we're so close to Christmas and price a lot of times pushes hard during these weeks. Okay, so Duna already did. Oh, by the way, let me take another picture here. Let me just paste it on my post. Give me just a second, guys. Sorry. Let me see if I did this right. Yeah, okay, it's done. So now let me take a look at gold. Gold had some targets that I had marked out. It is starting to feel like it's really going to follow my much longer plan, in the sense that I had this idea based off of Fibonacci's and such about it reaching 3K. I'm not sure when, but it really looks like it's starting to do that fourth wave kind of thing, ranging and pushing down a little bit more. And anyway, I have been keeping these levels here, which were basically previous day VWAPs and naked points of control, because they kind of became support and resistance lines, as you can see, and they're doing it once again. So right now, the obvious thing to do is just keep doing that. And for example, I have been having considerable success just following previous day VWAPs. So for example, this would be target, and right now I'm looking for lower to take out these lows. So maybe either from this naked daily VWAP or from this range over here. Not a breaker. Looking to short from somewhere there. The thing about this is that we have now just come to the naked weekly VWAP, previous weekly, and this reaction is pretty nice. So because the reaction is nice, volume profile from the low to the high, and we have the value area high of the range which we are using now, and we have the POC. I like both for a trade. If this doesn't work for a long that can take us at least to the naked view up. If this doesn't work, then we might just keep pushing down further into this liquidity here. But right now, I think it's good for a push up. Seems nice. It's the expansion POC. It's an older previous day view up, so I might just as well change this to a support resistance line, like so. This one as well. Alright. And basically try and use that for a push up. Because if it fails, it's gonna go much more down. Much more, in my opinion. And by the way, this is the CME chart. Keep in mind, I'm 10 minutes delayed. I'll check it out soon. But one of the reasons I'm bullish on it is exactly what you're seeing here. Let me hide everything. This was a gap that we're now testing, where we are at a previous structure point of a gap. And we have this as an excuse to go up, and we have that as an excuse to go even further up. So a long is very possible. I wouldn't bet on getting to here just because the trend is bearish, but I would not rule that out at all, you know. It's very, very possible. So we have essentially these gaps to fill, right? Because of the previous day view up, and because we're in London session, I think that the push up from here is probable if we get a reversal. But if it fails, then we are coming for this one, which is not tested at all, and is basically where we have the liquidity on the electronic trading chart hours. That one. All right. So basically, target, try to find a long very soon. Target at least this previous day view up, possibly more, possibly this range, but be very careful after that. It'll be, I think, getting to this one soon is a little bit of a gamble. And so let me take a screenshot of this, like bigger frame, and let me just mark it out that this is the previous structure point. Okay, let me just post this one and I'll edit after. Gold 16, 12. Oh, wait. I didn't take this one. Wait. Okay. Like so. Is it right? It's right. Now zoomed in. Just to show that gap, which is the one that is relevant. And now this gold view. Actually, without this. Alright. Alright, that's about it. Let me post those as well, and I'll add text right after. Duna did NQ, so I'm not gonna do that. And yeah, I'll end the stream here, guys. As usual, if you guys have questions, ask them on Discord, tag me, and I'll try to answer them during the day. I'm gonna be doing some chores and trading at the same time, but I'm at home. It will be for at least the entirety of the London session, so if you guys have any questions, tag me and I'll try to get back to you as soon as possible. Alright, so have a nice day, have a nice week, trade safely, guys. The week of December, the last week's 2 or 3 weeks, well, basically the whole month of December, but mostly the last 2 weeks are generally a little bit hectic, with a little bit of you know, hard to predict moves, those kind of moves that you wouldn't exactly believe that would happen so fast, and they do. So be careful. Don't try to not gamble the accounts away. And yeah, we'll see. I'll see you guys around. See ya. Bye bye.